welcome to this week's Karura Community Call. I'm Robin. I am Growth and Community Manager for Acala and Karura. I'll let Dan go ahead and introduce himself, and we'll pass it to Betty after.
Hey everybody, thanks for joining again. This is Dan Reeser. If we haven't met yet, I'm VP of Growth here, and excited to get into another week of updates around Karura. So thanks again for joining. Betty, go ahead and introduce yourself as well.
Hey, good morning, everyone. This is Betty, co-founder of Acala. Saying good morning here from New Zealand.
Cool. Well, if you're just joining us this week, the way these calls kind of go is we will go through the agenda that we posted in the community call whiteboard. We'll continue to use the whiteboard channel to post any sort of visual elements of what we're speaking about or any relevant links. And feel free to use the community call chat to ask some additional questions, or we definitely encourage you to raise your hand here and join us on stage when we open up for the Q&A section. So let's kick off on our agenda. This week we had some liquidation and collateral ratio updates.
Yeah, sure. So we've received another recommendation from Gauntlet, who is our economic assessor or risk assessor. And yeah, if you missed what the stuff that we talked about last week, basically what they do. So I posted a link as the dashboard. They kind of like live gathering data of our stablecoin stats, as well as the collaterals that's being used, which is where the risk are mostly at, and that is KSM currently. But of course, soon there will be another collateral available like LKSM, but right now it's just KSM. So so Gauntlet basically goes through the market information for KSM, such as volatility, and also the trading volumes, which will have an implication on, if there is a liquidation happen, how easy we can accommodate those liquidations and pay back the KUSD being minted. So in the last week, they've kind of observed there's more kind of like liquid assets for KSM on the market, and then other given all the other factors are kind of like stable. So they've kind of recommended that we lower the liquidation ratio from 1.8 to 1.6. That literally mean that previously to mint $1 or 1 KUSD, you are required to have $1.8 worth of KSM to do that. And with the lowered ratio, when you mint 1 KUSD, you only need $1.6 worth of KSM. So that just means the same amount of KSM asset that you have will give you more room to mint more KUSD, which will make your capital more efficient. So that's basically the whole liquidation ratio change is about. So this ratio could go down if the things just tend towards lesser risk, but at the same time it could also go up. Depends on what happened to the underlying collateral, which is KSM at this case. So at the same time, if we require lesser collateral, that also means if the KSM is very volatile, which is always the case, as everyone knows, you should be more careful of if you are setting very low collateral ratio, so very close to the liquidation ratio, right? Because any movement of the KSM to a degree that's bigger than the gap, then you could run into liquidation risk. So sure, your capital is more efficient once this happened, but at the same time, you also got to be more cautious of the risk. So that's that. And then I think so I've kind of thrown out the idea having people to build some liquidation bot or some notification bot, so that can warn people about dangerous positions and things like that. I think maybe a couple of people are interested, but if you're interested, can kind of take a look at the SDK and then see how you want to do it as well. So so that's about the collateral stuff.
Cool. I'll invite to speak this member here. Nicola, please go ahead.
So on the home page, the portfolio value does it include the LP token values also, or just the free KSM?
It didn't used to include. I don't think it has been updated. So we are updating two things right now on the front page. One is the LP token value, but also even you staked your LP token, it's also not showing the value either. So we are making the change so that it shows both of those value and include that in your portfolio. So both of the staked LP as well as your free LP, and then their corresponding dollar value as well. So currently it's not included.
Okay, thanks.
Thanks for your question. I'll remind everyone that the collateralization ratio that we were just speaking on, everything is posted to our discourse, which is the forums for governance. So you can always keep track. This one obviously went up earlier in the week, and you can now see it on chain. But I just shared that in the community call whiteboard. Cool. So, we spoke about it a little bit last week, the introduction of LKSM and what we're all kind of looking forward to for Karura. And I think that we are a little closer now. Betty, if you want to explain the state for LKSM.
Yeah, sure. So so just bear with me for those of you already know LKSM very well and been anticipating for it. So I'll just reiterate what it is and then why we even need it for those who don't know yet. So what is liquid staking and kind of why do we need it? Basically, right now, if you are within the Kusama or Polkadot ecosystem, one thing you can do is to stake your KSM token on the validators or just nominate validators so that you contribute to the security of the network, right? So that's the whole setup for proof of stake network. And obviously, one of the challenges there is once you staked your KSM becomes illiquid. You cannot use it for anything during the period that you staked it, right? And then it's inevitable that in a Polkadot ecosystem, the KSM will have other utilities. Not talking about cloud loans or anything, but various different protocols will need KSM as a high quality collateral, which you already seen, right? So for the KUSD, it uses KSM as a collateral. And then also, for example, some other cross-chain bridges, they may use KSM as collateral, to actually say bring Bitcoin across or some other maybe ETH across as a way to kind of secure that bridging, right? And also a lot of DeFi protocols also use you can imagine, on Ethereum, use ETH as collateral for lending and borrowing as well. So similar things will also happen in here. And then you will run into a situation where there's a staking yield, like around 15%. But at the same time, you also have DeFi yield. You don't want the two to actually compete. Because if there is a direct competition and then the DeFi yield is way higher, then you run into a risk of kind of like a bank run, right? Because you're attracting all the people to move their KSM to the DeFi protocol or other protocol requires KSM as collateral, and then kind of could potentially damaging the security of the Kusama network. So that is not a healthy kind of dynamic in the ecosystem. So very early on, we realized this nature of a proof of stake network. And to solve the illiquidity of staked KSM, we created this protocol called liquid staking or LKSM protocol. And then very simply put, you basically stake KSM via Karura as a parachain trustlessly, and then it will mint you LKSM token as a representation of your staking. And then through the LKSM token, it basically records how much share you have with the staking pool. And then the staking pool will send KSM on behalf of you to Kusama to do the nomination. So there's no difference from you go directly or go through this pool, but you get a share of the pool as LKSM. So once you have this LKSM token, it is fungible. and it's transferable, so you can sell it on the DEX or send it to someone else. It's also appable. I mean, it's also can be used in other DeFi protocols. For example, it can be used as collateral to mint KUSD. It can be used in lending and borrowing protocol. We haven't got one yet, right? So we're probably not going to build it ourselves. Probably someone else is contemplating building something on top of Karura or Acala, lend and borrow, these tokens. So it can be used in many, many different places without compromising the security of KSM, but also can have derivative value out of KSM to power the entire ecosystem from the ground up, right? So so LKSM basically gives you liquidity for staked KSM. It is also a very simple and secure way to stake KSM and earn. Because if you look at the UI, it's almost like a swap. You are swapping KSM for LKSM. You just mint LKSM out of KSM, just one button, one box, and then you've done your staking there. And then, so that is at a very, very high level why you even want to consider doing this. And then the way that we are doing it, so it's actually good to know what happened behind the scene. So we do have a roadmap here. Let me just send it over to folks so you can all see. So we do have a rollout roadmap. Because this actually involves a number of things, mostly like on the cross-chain side of it, there's a dependency on the XCM, so the parity team, to have a complete functionality for XCM, for all of this to be autonomous, right? So we're kind of taking the step here. So phase one, which is the change that's currently being proposed on the chain. So let me send through that the proposal here. So, which is like included in this runtime upgrade that we currently proposed, is basically the functionality of minting LKSM, and we will be able to hook it up with the front end, and you are able to mint. And then for the cross-chain part, it trustlessly actually sends through the funds to Kusama, and then it actually stake through a proxy account on Kusama. So I'll go into a little bit more like proxy account and what it can or cannot do and why it's actually secure, but also kind of streamline things for us at this stage. And for phase one, redemption is not available until the next phase. So that's very important to know when you get into this stuff. And that's also why we leave 1 week for ourselves to dry run this whole thing. So there will be a cap to set on how much LKSM is being minted. And then we're gonna do some internal on-chain testing. Everyone can observe. So we are gonna use a foundation's own funding to actually mint some LKSM and go through the entire process, so everyone can actually observe what is going on and then also understand the dynamics there. Before next week, once we open to public, you can actually decide how you want to participate. So that's phase one, and then phase two, probably maybe 2 weeks away, 2 or 3 weeks away, that we will open up redemption. So that's basically you can unstake and then take out your KSM. And then there will also be indicative voting on validator selection. And those voting on validator set, there's also a strategy that I will share in a moment that you can see what are the current sort of selecting criteria there, because we don't run our own validators. So if you don't, select one, it will just like based on those recommended strategies from Polkadot, and then we'll just use those to actually select validators. Things like the validator must have an identity, and then it need to meet certain return criteria, and also no slash has happened before. And then also things like how long has it been a validator, and also try to avoid one brand, and then because there's one brand for many validators, right? Try to avoid situations like that and select a wide range of different validator providers, and a number of those. So you can take a look at those lists, and yeah, those probably worth another discussion. And then phase 3 will be more fancy stuff. So phase 3, expecting the XCM will be fully functional then by completed by the parity team, and then we can fully automate the entire process for cross-chain staking. Obviously, that doesn't have too much effect from a user perspective. It just means things will happen quicker, and then things will become instant rather than currently we're doing daily consolidation of the rewards and updates. But once the the XCM autonomous happened, it will just happen a lot more frequent. From a user end, it doesn't have too much differences, but it's good to know what actually happened behind the scene. And then the second thing for phase 3 is on-chain voting once that's happened. And then the third thing will probably be very interesting is the validators can actually bring in their slash insurance, so they can self-insurance. So if and then when we actually select the validators, if they're self-insured, which means if there's a slash happen, they are able to compensate that their validators. Then maybe when we select, we can put that as a criteria and then prioritize those validators that they self-insure, right? So that means kind of avoiding slashing risk even through the liquid staking protocol, right? So those are sort of the stages that we're going to roll out the product there.
Well, there are a couple questions coming in through the chat. I wanted to kind of reiterate that it sounds like LKSM, as we come to interact with it, is going to go through these different phases of evolution. And so when it's first available on the UI, redemption is not going to be available right away. How soon after do we think, I just want to make sure everyone is well aware that if they jump in and our power users want to start using LKSM right away, that they're aware they can't get the redemption right away. But how soon do we see phase 2 coming into fruition?
Yeah, so anticipating maybe 2 or 3 weeks, and then also a bit of testing and then on-chain rollout. Yeah, maybe 3 weeks or so. Yeah.
Okay, cool. So some of the questions that we have in the chat are more about, I think, maybe some of the appealing features. You said apeable, and I think some folks are laughing if that's a new word. But maybe some of the more appealing features of LKSM, what I know we can't say exactly, but what kind of yield do we expect, in the difference between normal staking and LKSM? And I think this is a great time to also mention the features of unstaking as well and how it's different from normal staking.
Yeah, so when you stake through the Karura, then you should expect average yield as you would normally stake, right? Because obviously we are not going to choose the highest yield validators because they don't necessarily mean they are the safest, because there's always risk and return factor. So we are probably only going to be aiming for a balance of return and also slashing risks. So that will put us in probably an average bucket. And then so at least you are covered, so you are not losing your staking yield while you use LKSM to do other stuff. So for example, you can mint KUSD and then put that into the liquidity pool and then earn, I just looked this morning, it's 96% yield there, right? So that's one thing that you immediately can do once we turn LKSM on as collateral to actually ape into other protocols to generate yield, right? While not losing your staking reward. And potentially there's also other pools might be opening. For example, potentially LKSM and KUSD. We're still kind of debating how the dynamic should be and then what it should look like. But we can lay out some questions there for everyone to think and discuss. We still have some time for that because the plan is to just roll out the LKSM by itself, because even just by itself you will have benefits straight away, and then let it dry run for a week or two, and then we can roll out. Maybe collateral will come right after. So to mint KUSD, so people can already ape into some of the protocols and get the APY already. And then we can talk about all the liquidity pools and things like that. So one step at a time, I think, for this one, because it does kind of have multiple correlations into different protocols. So yeah. Yeah, and then of course, like one question I didn't answer, Robin, is once it becomes like fully functional with the redeem feature, that is one advantage there is like you don't need to wait 28 days. You can withdraw, sorry, not 28 days, 7 days for Kusama. You can withdraw in 6 days, 4 days, 3 days, or immediately if you want to. Because the way that it's set up is it has some liquidity set up on side, and then algorithmically you can figure out how much we should put aside to have provision for the early withdrawals. And yeah, so you do pay a fee for early withdrawal, but if you want a liquidity, then that's one way to actually get it also. So.
And that's definitely something I'm looking forward to, having that flexibility and immediate access to your liquidity. I did invite Blink up to the stage to speak. We have a couple speaker requests, but I'll jump into the chat while I'm waiting to see if they accept. Let's see right here. If I stake and get LKSM, do I need to hold on to LKSM in order to get the staking reward, or is the LKSM just needed for the principal?
So this product in particular, the LKSM product, is the principal and reward combined. I know there are other products. We also have those in our pipeline to actually be able to separate them and for different, DeFi primitives. But this particular one, LKSM, is combined with the principal as well as the reward. So how they will work is, I don't know if this formula will mean anything, but then I can explain, is that if you actually mint some KSM, right? Let's just make an example. If I put in, let's say 10 KSM, and then just arbitrarily the initial exchange rate, let's say it's 1-to-1, right? So then, I will actually get 10 LKSM out, right? So this is 10 LKSM. But then over time, those 10 KSM is going to be put into Kusama and then earning staking reward. So the exchange rate will likely to go up over time. So that means maybe 2 days later, my 10 LKSM will worth around 10, I don't know, 10.2. This is like arbitrarily, I don't know what the rate is. So then maybe 2 days later, my 10 LKSM will actually worth 10.2 KSM. For the exchange rate. So you will see your holdings will gradually go up. And this is also probably worth noting on the UI. I hope it's not too confusing when you actually use it. So we try to make it so that only showing the relevant information. Let me send this across. So yeah, so on this UI, you will see we're not showing the LKSM token per se because it doesn't actually mean anything. We're actually showing the liquid KSM, which is the equivalent KSM that your LKSM is worth. So you should see that liquid KSM continue to go up as the day go by. Well, unless there's a very dramatic slash event, which we hope not happen. So yeah, so I hope that explains.
Cool. I think that's a good explanation, and hopefully everyone's following along in the whiteboard, not getting too freaked out by some formulas. But yeah,
I've actually got, Robin, one thing I wanted to just have Betty explain that
Sure.
I was thinking about, because with Kusama staking, Betty, a lot of people probably select their validators depending on the validators that they select. They could, like, one guy could be staking and earning like 12%, and then another woman could be staking and earning like 12.5% because she chose different validators. So is it true that since this is like a staking pool, everyone will be earning essentially the exact same staking return? Is that right?
Yeah, so because the LKSM, the whole point is fungible, right? So that means everyone will weigh in based on their LKSM holding. So you can actually vote, but your vote is actually weighted, and then a validator set is chosen. Well, not validator, but nominator. You're actually nominating all those validators are chosen. So and then it's the nomination is the standard Kusama nomination process. So if you go on to, well, you're probably all familiar with all of those stuff. So in there, you can actually see a whole bunch of selection criteria. in the I think it's in the validator stats. If I can find that screen, I'll share that. Or targets actually. So let me share the screen. So there's a whole bunch of things that you can actually select. For example, a single from operator, which means if it's the same operator and they actually run 20 validators, you try not to choose all of them, right? So and then there's also selection on commissions and things like that. Let me just share this. It will be a lot easier to explain. So the screenshot I shared on the whiteboard is the current sort of various parameters that actually Polkadot put out as things that you need to consider when you do staking, right? And then we currently have this very simple strategy that based on the recommendation by all those parameters recommended by Polkadot, and then you basically look at the rewards. So there's like if they take too much commission, then you remove them from the list, and then also how much slash that they've had in the past and things like that. So so you can use those strategy to actually vote. And then let's say if you have some LKSM, if you indicate your selection, and then your selection actually go into this pool of votes, and then folks can actually come up with the strategy of choosing which validators. Right now, it's the standard Kusama validation. So one account you can nominate up to 16 validators. We do have the option to open up multiple accounts as a parachain, and then so which means you can kind of nominate more validators, which in a way will probably help spread out the risk and also have a reasonably good return as well. But the goal is not to have the highest return, right? The goal is to have a good enough return or average return so that we have a lot more liquidity for you to actually do other stuff that earn more yield on top of the staking yield. So, yeah.
Cool.
Yeah.
Well, I do see that Blink did come up on stage. If you want to ask your question now, go ahead and give yourself an intro, Blink.
Yeah, hi everybody. Thanks for being here. Thanks to the team for doing everything you do. You guys are awesome. I'd just like to ask, the redemption for the LKSM, I understand isn't going to happen right away. But as far as like being able to use the LKSM right away, will it be minted right away? And then in addition to that, will there be an LKSM pair to LP in right away?
Yeah, you're preempting all this. Yeah, so LKSM is minted on the spot. So as soon as you put in KSM, LKSM is minted on your account, delivered to your account. And then you can, if collateral becomes available for LKSM for KUSD, then you can ape into that directly. Like so, mint LKSM and then deposit into the stablecoin protocol and then mint KUSD and then put that into the pool. So so that part is available. Yeah. And then and you also mentioned the LP pools. So right now we're considering a couple of options, mostly to do with anticipating the demand and also how much LKSM will be available. Because if you have a pool and there's not much depth, it's actually not quite useful. So the two pairs potentially, one is the LKSM to KUSD pair, potentially, because that helps liquidation as well. So that's one thing that we're considering. And obviously the other one is LKSM and KSM, but not sure if that will be very useful initially, especially when the liquidity is low. Maybe at a later stage, if we already have the redemption, then that wouldn't be too much demand on LKSM and KSM. So a number of factors that we're weighing in, but it's even if we list, it's more likely to be the LKSM to KUSD, I guess, at this stage. But we're still kind of pondering that, and also what sort of incentive should we put? Yeah.
Thank you very much. And may I ask one more question?
Sure.
Yep, go for it.
I'm just real keen on limit orders being available at some point on here, and I was wondering if maybe that was an idea, and that's all.
Oh, on trading, yeah. So there's a number of things that we are thinking that probably bigger than ourselves is like we kind of like moving to the direction of kind of like a DEX aggregator, or make our trading a meta protocol so that we plug in other decentralized exchanges. We already have one or two are building that kind of serve different purpose trading. So potentially, those folks can address those specific trading requirements and gear for certain group of traders much better than we do, at a protocol level. But if we can empower them to do that and aggregate their liquidity and also provide extra sort of connectivity into other protocols, that's basically our job. Our job is to build the infrastructure and empower others to build. So that is sort of the current direction that we are thinking that we're going, especially when there are already other people are building DEX, going to deploy on top of Acala and Karura as well, for that matter. And yeah, to be able to integrate. So some scenarios will be like, there's a, you still go to the DEX, and then if you are trading, let's say, stablecoin pair, right? Maybe there's USDC and there's AUSD, then it goes through the stablecoin trading DEX, because some curve is better than just the AMM that we currently have as an implementation, as better suited for similar sort of assets, right? And then also maybe there's also margin trading, or maybe there's also order book trading for different purposes, and then you can have like limit orders and things like that as probably another provider, as long as we can aggregate those liquidity and kind of like serve each other's needs, then it will be good. I think that will be a much better and open approach than we just implement everything. So
Cool, thanks for those questions. Well, maybe this is a great time to kind of jump off of how Karura is going to continue to change and how much can be built with it, and kind of go into the next part of our agenda, which is upcoming Karura Hackathon. I think, Dan, did you want to say a little more about this?
Yep.
Cool.
Yeah, so we aren't going to roll out the details yet because we're just finalizing the challenges and everything, but I just wanted to give a heads up on a hackathon that's coming up. And for non-developers, maybe just give a quick little bit of background on hackathons and why they're important. I think it was last year, or maybe even in 2019, we did a hackathon for Kusama, very early in Kusama's life. And just for perspective, I didn't really realize at the time that was one of the first hackathons I had organized, and I didn't really realize the importance and how big of a deal these are. But fast forward now, it's been, I think, a year and a half or 2 years. And the winner of that hackathon was Unique Network, the NFT platform on Kusama. And then one of the other teams in that hackathon was HydraDX, who's soon going to be launching on Polkadot and are going for the Basilisk parachain on Kusama. So just to put into perspective how important hackathons are and how big of results you can see from these. So because of that, I'm really excited to start putting together some hackathons for Karura along with the team. We are going to be joining the Encode Club hackathon. If you guys have heard of that, there's been, I think, 1 or 2 Polkadot hackathons already with Encode, and Polkadot's gotten quite involved with the Encode team. They're a very professional hackathon team based in London and have a pretty good network in kind of the university and PhD space. So we're going to be putting together a hackathon teaming up with Subquery. So it should be pretty exciting because we'll have a live DeFi chain that developers can build on top of, in addition to building things like dashboards, analytics tools, and other tools that can leverage the data that's the historical data that Subquery is able to provide. So look out, I don't know exactly when, probably in the next few days, for us to post these challenges. We will have a pretty substantial prize pool, and we'll be looking for people to build projects in a variety of ways. And developers don't necessarily have to be students by any means. Any developer can join this hackathon. So just look out at all of our channels and on the Discord here for information on how to join. One thing I would want to add is hackathons in the Polkadot and Kusama space can be very challenging, especially if the hackathon challenges focus on building with Substrate, which is very difficult to learn, obviously. because it requires Rust background and quite a bit of time investment. But with this hackathon, we're kind of going for a couple different ways to cater to kind of a multitude of different developers. So there will be challenges for things like building dashboards and tools, like I mentioned, building bots. So these are meant to appeal to developers who may be more comfortable with front-end work, JavaScript, and what have you. And then we'll also have challenges focused on building dApps. So we'll have dApps around like NFT and DeFi use cases, building general DeFi dApps, things like money markets, DEXs, derivatives, DAOs, whatever. It's kind of an open-ended challenge, so for whatever people are interested in building. So that's kind of the update on this hackathon. There will be at least one, possibly two more hackathons coming as well for Karura. So just keep a lookout for this, and we hope that the developers on the call are interested in kind of going for these prizes and building with us. The last thing I'll add is we will be encouraging teams, or at least we will be able to support teams who win kind of first or second place in any of these categories. We'll be standing up the Acala grants program publicly pretty soon, so we'll be able to offer eligibility for an Acala grant for any team who wins first or second in this hackathon. We'll be able to help provide access to venture funding and incubation from the Acala and subquery team, along with some other smaller things. Like, of course, the prizes are significant, and then swag, publicity, and things like that. So that's it for this kind of update, and hopefully you guys are able to join.
Cool. Well, I'm going through the chat to see if there's any other questions from the community. And of course, we usually take this time to invite some folks on stage to ask if you want to join the voice channel. Just raise your hand, we'll invite you to stage.
I do have one thing I see people asking. So, yeah, so we are kind of like supporting other parachains to list their tokens on the Karura Swap. Well, basically, you know, they can just come over and then raise a proposal, and then basically describe to you guys what their plans are, and then what the program looks like, and then it will be an on-chain sort of proposal, like what we did for our for the KSM or for our own tokens. And then, you know, they can be listed on Karura Swap. So a few teams already, indicated interest, and they're in stages of like technical sort of testing, validation, and also at the same time preparing some sort of program to actually share with the community. So those are coming. So just like, be patient.
I really appreciate everybody taking the time to come to these calls every week and keep up with all the updates for Karura. Please feel free to continue to ask questions. We'll find them in the chats. And I will definitely upload this recording of this call and post it in the whiteboard channel. And it will also be available on the Acala YouTube. So thanks again. We will see you guys next week.
Thanks, guys.
Thanks, guys.
Bye.